Good morning, everyone. The market Tuesday was remarkable for its uniform theme, the risk of too low inflation. We saw that in Sweden, we saw that in the UK, then in the Eurozone. On the other hand, the US CPI accelerated slightly, while core inflation remained stable. This suggests that the US doesn't face deflationary pressures, unlike Europe, and supported the dollar by making it more likely that the FOMC would decide to begin tapering today. We saw the impact of the problem of too low inflation in the surprise ECB rate cut in November. It appears that the trend has by no means dissipated. On the contrary, it seems to be spreading and intensifying. I think this is likely to be one of the major market themes for 2014. It's particularly important as countries struggle to dig themselves out from under a mountain of debt, because deflation would increase the real burden of debt and further depress the economies. How central banks that are already hitting up against the zero bound for nominal interest rates deal with this problem will be one of the major issues facing the market. The different trend in prices between the US and Europe and the resulting different bias in central bank policy is likely to be one factor that helps the dollar to recover versus the euro in 2014, in my view. Well, speaking of monetary policy, today the feature will, of course, be the FOMC's decision on what to do about tapering off its quantitative easing. Most analysts don't expect the Fed to begin reducing its $85 billion a month in bond purchases today. Personally, I think they will, although, of course, the decision is finely balanced. If they do decide not to taper, then I would expect the dollar to sell off, as there are still some people, like me, who do expect them to start today. The high beta currencies that tend to move along with stock markets, Australian dollar, Canadian dollar, and New Zealand dollar, would probably tend to do best on this scenario, while the yen might underperform as Tokyo stocks rally. On the other hand, the most bullish outcome for the dollar would be that they do start to taper and they make no attempt to soften the blow through additional forward guidance or other measures, such as reducing the amount of interest that they pay on reserves. That would probably hurt the emerging market currencies that have performed well recently, such as the Hungarian florin, Indian rupee, and the Korean won. The Brazilian real, South African rand, and Turkish lira would also suffer as currencies with large current account deficits. Combinations between those extremes, start tapering but with various additional measures on forward guidance, etc., would probably result in a more modest dollar rally. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.